how do we put our portfolios in the best possible position for 2025? John, that's my initial question. What do you think our viewers should be doing?
Hello, Steve. Good morning. I think that's the most difficult question of 2025, of course. We saw that 2024 was such a difficult year, even if we had such a good performance in the US. But I would say that we kind of proactive at Mirabaud, same as the central banks that remain proactive. There will still be two different point of view. The one is in the US with growth that is still sustainable, and on the other side, political issue in Germany and France, of course. So on one side, the Fed will lower the rates at 2 or 3 times. Depends, of course, on the data. And on the other side, we think that the ECB will be much more dovish and will not focus on the mandate, the only mandate they have, so inflation and price stability, but more on growth and negative growth potentially in Germany. So we still are quite bullish on the US equities. We think that we'll have equity cyclical recovery, tax cut that will come when Mr. Trump will be in place, and rate reduction that will create a favorable short-term environment. But there are lots of uncertainties, Steve, and I'm sure you know that.
Yeah. It's my life to know those uncertainties, or certainly ask people like you about those uncertainties. John, look, are we doing something? Are we being guilty of doing something in this first answer, in this first question as well? Thinking these are the macro factors, this is how it's going to affect the stock market, rather than actually saying, no, let's look at these companies and what they're actually doing with all that as a backdrop, and going bottom up and saying, do you know what? Maybe that's where the safe havens are, in these corporates, rather than in the macro, rather than in the bond market, rather than worrying about the currencies. The corporates themselves are run better than governments, run better than perhaps than central banks, and know what they're doing. Let's just say the safe havens there, rather than worrying about wherever the other safe havens are.
Yeah, you're 100% right. We should not look at central banks. You know, they were so wrong in 2022. They might be wrong in 2025. So of course, look at the U.S. company, for example, that will be driven by a double-digit earning growth. And on the other side, European equities, you were talking about the CAC 40 before, they will be driven by, for example, the Chinese growth more than what is sustainable in the European equity. So that's why we're still looking at I would say the west part of the world. We still think that even if valuation is high, it's a place where you should be. And Steve, I know you don't like when we talk about valuation, because there is a reason why there is a discount between Europe and the US, but we still focus on the US side actually, and on the US company that is driving by double-digit growth.